Welcome to Top Trading Edge, folks. So today is weekly, yearly 2022-2023 Tesla update video. So folks, those who follow me long enough, we started this space. So remember in 2021 when I sold off my every position of Teslas or all the positions, and when I announced that, hey, Tesla gonna go down, and I made a lot of videos right here. They are recorded on YouTube also, folks. So let me find out which are the video you can look into. Sorry, right here you see this is the all Tesla video, and there's a lot of video, and I used to tweet, right? So when I announced, how do I reach there? Many people have had a question. So, Josh, how, when Tesla was $1,200, before $1,200, I said Tesla would be going down, and many people used to hate me in a different Twitter spaces because whenever I talk about Tesla, there is a guys, I'm not bulls and I'm not a bear. So hold your breath today, folks, and understand what I've been saying. This has been a while enough, right? So that time I used to go on a spaces and educate everybody free of charge, folks. Right now, those who took my financial classes, I do teach, folks, right here. I do teach my Top Trading Edge Academy started, and where I give people classes, right? People pay for it, folks. Here, when people, they have private classes, people pay for it. Otherwise, I'm live every day. It's free. But those who taking private classes, what did I teach you guys? Those who bought a Tesla or sold Tesla, they must be thanking me right now, right? How? Because when I was giving free, people used to hate me. Now they are paying. Now they are doing private class. When I do, they're paying for to learn, folks. Okay, that must be reason. So how did I reach my 138 price target right here, where Tesla gonna go? And you guys know that it's all recorded right there on YouTube, folks. Okay, it's right there. All these video is nothing new, because people gonna say is 199 is a good deal. This is how everybody invest, folks. Okay, I'm not talking about Tesla because it's not just a everyday. There are so many stocks, but people invest like, oh, 400, oh, it's 250 cheap, oh, it's 199 cheap, oh, it's 150, it's so cheap, let's go and buy, right? This is how we are investing, guys. That's not called investing. That's called, what I call it, speculating. Even though many investors, they think I'm investing because it's called, they think it's investing, but I call it speculative. Why? Because you have to apply your macro, you have to apply your financial fundamental, you got to apply your pure technical also. So when we talk about technical, there are different analysis of technicals, but you got to apply varieties of things, and based off of that, you got to reach to the level. Because when, remember today, Tesla missed the delivery number, and we announced that, hey, there is a sluggish in the market. We understand totally. Yeah, market could have a slug as the recession comes in. People, these are the two a big ticket item, real estate and the auto industry. Those big ticket item would be have a major impact. And I always teach you guys, you know that, right? That auto industry has a depreciation. Real estate does not have a depreciation, such as, not like auto, right? Auto, when you buy it, it has depreciate. It value deteriorates, value goes down. Real estate you can buy, but it can also appreciate long term. Car doesn't appreciate long term, right? As the time you pass, it keep going down the value, right? So you got to keep it in mind. That's why the auto industry is a very capital intensive business, plus the profitability is less. So I've been teaching all this in financial fundamental class, but I just wanted to give you a heads up, folks, here. So just to analyze, deep dive in. People say, Josh, can you deep dive in now? What do you think? Because 2022 year is over, your price has been reached. Now what do you think of 2023? So that's we all are here. So let's go and deep dive in, see what I think about 2023. So right in front of you, I did mention 2023 that we're gonna go to $78, folks, right here. But how? Because we don't want to just jump in on pure technical, because the sloping support is coming right here all the way. So every time the trend line right here is your trend line coming all the way from 2019 right here, which is $78. Then market jump on 2020, boom boom boom, Cathay would pump down, then market little pullback, then again we pump, right? And then all the steamy check, stock went up right there, boom boom boom. And then every time parabolic moves, trend line breaks, linear line get tested, rebound, bounce from the linear line, and linear line breaks, we could go and test the always trend line. That's the technical. But hey, do you really think? Why? Because I used to say that when I sold my whole portfolio in 2021, and I mentioned that, guys, we're gonna go and test this trend, and people would laugh at me. Hey, this is $1,250 stock, you think gonna go here? No way, Jose. They're not gonna believe that it's gonna go to this. But you gotta understand 170 time P ratio, guys. You can go and take a look at any auto industry. Auto industry is a capital intensive business. Okay, look right here. One thing I tell you, these guys, they're gonna pump. Look at the headline. You need to read the what they type. Tesla production up 47% year by year. Tesla delivers 40% year by year percentage. Oh? This is how they will write you. Then same thing right here. Look at this. Tesla reports 1.3 million delivers in 2020, growth 40%. Folks, do you know basically, the growth, if you want to look at the 2022 growth, it used to be 55-60%, now went down to 40%. So how do you analyze? So that's what we're gonna learn, because people gonna create this headline, but the reality is, hey, at that time you only had a one factory, then you had a two factory, then you have a three factory, you have four factory, you have five factories. So when you have a more factory, you have more elephant in the room, right? You need to feed them. You can't just have the elephant sitting there and not to feed them. You got to feed them. So what does it mean? You have a more expenditure. So yeah, absolutely, you can generate more. You can generate more numbers, absolutely. Yeah, you can generate more deliveries, but expenditure you need to add that too, because car has a cost. That cost you need to add that. So we need to find out, because everybody gonna say, no, look at the number. Oh, number is growing. Look at that. The growth is there. No, 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 no. You got a five factories now. That's your liability, right? If you cannot produce, if you cannot if you cannot do production, if you cannot produce, if there is no demand, you know what I mean? Like, if people don't have the money, then there is less demand, you won't be able to deliver, and the recession coming in, right? This is how we need to calculate, not by just the growth, folks. Okay, people gonna sell you all the headlines. Oh, look at the numbers growing, but hey, how many factory you used? How many factory did you use at that time, and what is your cost? And I'll show it to you right now. So let's go and take a look at it right here. Okay, so let's go to statement, and let's go to annually right here, and we analyze it right here. This is what I like to see, because number can lie. Right here, net income, this is 2022 trailing period, trailing income right here. It's not, the fourth quarter earning is not there in yet, but this is the best period right now. Tesla had the best period, made a tons of money. This is the best period right now, trailing. Okay, this is the history. We are talking about future now, but we need to look into future, but right now we are talking into the trailing income. So this is the net income. Tesla had $11 billion net income, and okay, net income, but the revenue was 74 billion. So if you look at the math, folks, 74 billion, this is the speculative price. Okay, the price what you see is a revenue, the price you choose 74 billion and 11 billion. Revenue could be anything. You can go take a look at the Amazon, folks. Revenue is almost a $500 billion, right? Revenue for me is nothing. I need to look at the net income, 11 right here, which is almost currently Tesla is making like 14-15% net profit. So whatever investment they do, they make the profit 14-15% trailing. Okay, this is the trailing net profit, folks. Imagine what would happen to next quarter. The coming quarter result is not out yet. Numbers, bottom line is number. You can deliver any car, so the numbers are already missed. Imagine what would happen to the financial, right? Because they have five factory, a lot of expenditure involved in it, right? They spend money, just like Amazon spend a lot of money on warehouses. Same thing, these companies spend a lot of money. So that's first quarter, second quarter, third quarter 2023, where people are expecting recession. So that's where the number, for forward looking number, we need to focus. Okay, not the trailing. This is the trailing number. So based off of trailing comes out 14% net profit they are making. 14%. What would happen to the earning coming out, this quarter, and the first quarter and the second quarter? You know what I'm talking about, right? Because of the recession. So that's why you need to look into that. Otherwise, because people gonna tell you, oh, well, guys, folks, you know how many, whatever the cars makes, you know how many BMW makes? 2.5 million cars they are selling, right? Mercedes is selling 2.3 million cars. Tesla is not selling even a half also, right? So my point to explain you is this: auto industry, if you look at the PE ratio, folks, normally PE ratios are like 5 P ratio, 6 times, 5 times, 6 times, below 10, 7 times, 6 times, 5 times, right? So Tesla was 170 times. So that's why I said, hey, Tesla could go slowly, because it's about the profitability and about the macro and about the financial fundamental. Eventually it can come down, and this is how I landed. It could go to 137, and it did happen, and that's how we reach 2022 target right here. Now the 2023 target we could be 78 at this particular, but I got to go one step at a time, folks. So this is based off of that we could really go. Though still Tesla is those who bought a Tesla pre-pandemic level, they're still up 92%. Their portfolio is up 92%. Those who bought it pre-pandemic, remember pre-pandemic, not the post-pandemic, pre-pandemic. And those who bought a hold on, let me look into right here. Those who bought it in a after pandemic low, then they have a 500% profit. Those who bought it right here, they have a 500% profit, right? Pre-pandemic 100%, post-pandemic and in the pandemic time, then they have a 500% profit. So there are people. So market right now taking most of the tolls. So basically snipers sitting on the top and taking tolls on a lot of balloon stocks. So Tesla was one of the balloon which I used to tweet and I used to guide people, but people do not like. And then I'm giving financial classes, then they understand, oh wow, because it's happening. And look, whatever I've been teaching, those who took my financial class, folks, now you see the result. Why I was saying that at that time, right here is the result. It's happening right in front of your eye. So now people want to know, Josh, do you think now we have to buy? And I said, I would not, folks, jump in any bandwagon. Why? Because bottom line is a macro overrules all technicals and all the numbers, what you're looking at it and others, financial fundamental, everything can be overrules, right? That's the reason. So macro telling me, hey, no, we just about to start this recession. We are not in a recession. People, do you know, look at the call and put ratio, when we were trading, right? People have a tons of money to buy calls and puts. Even these record breaking people, our market is right now the casino. People want to just go and speculate. So market maker loves it, right? They loves it. So people have a lot of money. Still people have the money. So hey, they continue speculating and keep putting money into market. That's what is exactly happening. So folks, what does it mean? So basically, the bigger the elephant, remember I told you, you have 5 factories, 6 factories, 7 factories. It could benefit in future. I'm not saying that is the time we need to, when the table turns, everything table turns. Absolutely, when macro change, I would jump in on a Tesla and man, I would be riding on it. But you don't want to ride based off of some people who are gonna say because they are holding their position. This guy bought a jet 2 weeks ago right here, but they will pump. You never find out the reality. They have millions of followers, folks. We only have only few thousand. They have millions of followers, not only one. So what I was about to explain you folks is social media, folks, is the biggest player, not the financial fundamental. Social media. So this is social media. Look at this, and this is the king right here. Is the king. You see this king doesn't move in this game, right? But most of the who is moving in the game, all the pawns, bishop, knights, right? So these are the one who moves and makes a noise around and like Kathy would used to say, Tesla gonna go to 5,000, Tesla gonna go to 8,000. After 5,000, Tesla gonna go to another $7,000, right? These are the pawns. They are the one who will talk about these because their positions, you do not know when insiders are selling, right? The insiders are selling crazy, but they have some position. We don't know how much position they have, how much position they sold, right? Sometimes we do not know what their agenda behind. But folks, trying to tell you is, these are the pawns. You are the one who holding the bags. They exit, and pawns always make a noise, and it echo through the social media. And we holding hopes on what? Oh wow! Look at that. Tesla 1.3 million delivers the car. But hey, earlier you only had a 1 factory, you had a 2 factory, 5 factory now. 5 factories, you have more liabilities, more expenditure. You need to make more profit. If the profitability goes down, then it's not good for the company, right? Number doesn't matter. The financial matters the most, right? That's what we need to understand. The financial matter the most, not the number, because the percentage is going down if you take a look at it, right? And I told you, right? The growth is on the 2022 growth went down 55 to 40. What would happen to this quarter number comes out by the financial number? That's what we need to focus on, financial, because dealer, you can have 5 cars come, 5 factory can deliver many cars, but expenditure is higher, folks, right now because of the inflations and a lot of other material shortage, and we apply the macros, and based off of that, that's what is actually happening on it. Because you can't have a car assembled, all the parts buying from China and assembled in US and sell it and get all the benefits. No, that's not how it works now based off of Binance. You cannot get semiconductors, chips and stuff like that. If the car is built, many stuff built in China, you got to be built in US. And that's why it takes a little time, slowly. But folks, so right now, based off those financial calculation, technical calculation, we are heading here 78. So for me, is this a buy 123? No, I would not. Market could look, market has agenda. So what I look at this, market first, market first, market first. What market does it? Market has a bull cycle, bear cycle, bull cycle, bear cycle, right? This is how the cycle goes through. Market maker job is to create the liquidity for the bulls and bears, bulls and bear. So right now what happening is the bulls and now the bears. So that's why, well, if anywhere relative weakness on any company, Tesla or any company, then they would go down. Absolutely. Because snipers shooting on the top and shooting to the company who are balloon. And this is how I said balloon in February, folks, right? And that's what is happening to individual company, those who are up, way up right here. So Tesla went up how many percentage? You know that, right? So based off of that, there's a lot more balloon, lot more air to come out of the balloon, and that's what is happening. So 78 it is right now is the sub target to watch. Maybe a little compression out here at, even though bad news could be a good news. Remember, folks, it's all about weekly option expiries and all. So bad news could be good news could be bad news, temporary stuff like that can be played. So we need to find out. Monday, Tuesday, I would give a couple of days, see what market does. Absolutely, Tesla might sell off, continuation, and that's the perfect news. It can happen that, but hey, I don't like to catch the falling knife. Let the knife fall and then we'll see. That's how things I would like to invest. You need to identify which cycle are you trading into. Are you trading into 3 months, 3 years, 5 years? Because most of the people get squeezed because all the pawns, they always announce, oh, it's gonna be 5 years. Okay, 5 years, but then people get squeezed when the stock, they bought it at 1200 and it goes to here, and now they're losing their houses and they're getting divorced because of they made a mistake because they don't have a stomach. Then why did you buy it here? Because you have a 5 years. But people don't have the stomach, folks. So you need to understand, you are making mistake is cycle. That cycle what you choose is wrong because of you don't have a stomach. If you have the stomach, absolutely, but please don't. It's said and done is different. People get squeezed. Most of the people, my 25-year experience, I'm telling you, most of the people end up selling when they get squeezed, when the price drop, when the price is higher, when they see profit, they don't book, they end up booking loss. This is how things are. Our nature is why, and that's why you need to identify the cycle. Kathy would say 5 years. Some people say 3 year, 4 year. Folks, you are getting squeezed and sell and end up losing money if you have a stock. Yeah, 10% people would be there. They might be go through all the financial pain and they hold it. Absolutely. But are you qualified for that cycle or not? That's what you need to deep dive in within you. Forget about rest of the social media. You need to deep dive in. Do you qualify for that long enough? Then absolutely. Then you choose the cycle 5 years. Absolutely. But you choose cycle 1 year, 6 months, 1 month, right? Identify the cycle, and then you got to stick to your cycle. You have to understand that. Otherwise, you will be the loser because there's a lot of pump and dump goes through this market, folks. There's a lot of agenda behind, and that's why I'm here to educate you people. You need to identify. There's no pump, there's no dump here. All right, folks. So this is the Top Trading Edge Academy, folks. We are always live every day morning 9:30 to 4 p.m. and it's free, folks. Anytime anybody can join on YouTube. Okay, right here you can type in Top Trading Edge and join. It's free. Thank you. Bye.